Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham, and today is Friday, April 24th, and I thought I'd come to you with a brief market update, let you know what's going on out there. The S&P 500 is basically unchanged on the day, hanging right out at that 2,800 level that we've spoken about previously. We're up a little bit since I last spoke to you on last Tuesday, but really just continue to be range bound right around 2,800. A lot of people have reached out to me and said, okay, can we just talk about what's fueled this rally? What has fueled the sort of lift off the bottom? And the reality is there's two things that happened. The first is just massively better data on the virus front, cases peaking before we thought they would, lowered overall death counts, lower overall case counts, and a sooner end, I guess, a little bit to the social distancing measures that we had thought might hang around for much longer may be able to be relaxed, at least in part, a little bit sooner. So that data is all good on the virus front. And then the second piece of the rally has really been fueled by the federal response to the virus in terms of the massive stimulus packages that are being put in place. Just last night, we saw another $400 plus billion pumped into virus response, and now there's even talk of an additional round of stimulus to come after that. So the federal government has basically come in and said that they are going to do everything in their power to try and minimize the overall impact of the virus. And that deals a little bit with the concept of moral hazard, which we're going to explore a little bit right now. In the 2008 financial crisis, there was a sense among market participants that maybe some of these banks should fail, right? Maybe some of these institutions that had created these loans, that had created the subprime process, maybe they should be allowed to fail because to step in and bail them out and save them just encourages risk taking. You don't really see any of those arguments in the context of the current crisis. Everybody realizes that the global pandemic is not really any of these companies' faults. And so stepping in to provide them with aid is not really questioned, which is good because it means that we won't see, hopefully, some type of Lehman or Bear Stearns type massive failure before people realize the system needs to step in and be saved. So that's a good thing as far as the market's concerned. In terms of overall economic data, we got the last University of Michigan Consumer Sentiment Index out this morning. It showed a reading of 71.8, which isn't great. Don't get me wrong, we were at about 100 before this all started. But it is interesting in that the consumer sentiment survey bottomed. So the prior reading was 71. Obviously 71.8 is a little bit better. And so that's a nice indication that at least here towards the end of April, that it looks like consumers may be at least as pessimistic. They're not getting more pessimistic, which is good. And I'd just like to remind everybody that during the depths of the crisis, really throughout all of 2008, we were at a consumer sentiment level really closer to the high 50s, low 60s. So it is nice to see that the consumer at least feels a little bit better about the world than they did back then. So that's another good indication. Continue to see corporate earnings roll out. A lot of companies withdrawing guidance, basically saying they don't know what Q2 is going to look like. Considering we're only about 24 days into Q2, I think, and nobody really knows when the social distancing guidelines will be lifted and in what stages. I think that's totally fair for most of these companies. And like I've said in prior updates, the fear-greed dynamic that exists in the marketplace right now is such that most investors appear willing to give these companies a pass really on all of 2020 and more focused on what 2021 looks like. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. Certainly hope you have a wonderful weekend, and I look forward to talking to you again soon.